Hi, this is Zak Mir with the US Chartbreakers here at Zak's Traders Cafe for Tuesday, the 10th of October. Starting off with the S&P, which has made a great bounce, a great rebound rather, above the rising 200-day moving average, above the floor of that rising trend channel from back in August last year. Bouncing above a key moving average tends to be a leading indicator on the upside, and that's proved to be the case now. We're now back above the old post-June neckline support for this market, 43.30. And above that on an end-of-day close basis, looking for up to the 50-day line at the 444.20 mark. This stage only well below recent neckline resistance, 42.70, suggesting that we might have to have a sub-200, 4,200 dive again. So this market looks as though it's at least temporarily out of jail, especially given the way it shrugged off geopolitical concerns. Moving along to the stocks, and starting off with a new stock here. Here we've got Acurx, and here you can see that we've broken right through the 200-day moving average there at $284. Above that, looking for the top of a broadening triangle there from March this year, in fact, as high as $395, and we're looking for that by the end of this month. In the near term, ideally holding the market actually ideally holding above the $330 level, the old June intraday resistance. Another stock on the front foot at the moment is Applied Therapeutics, and here got a rising trend channel in place since June. We found new support at basically old August resistance, or old May and August resistance, around $215, and above that we're looking for this market to head as high as $340 by the end of next month. The 50 and 200-day lines both rising, and that June rising trend channel also inspiring confidence at the moment. Another stock which is worth a look in terms of the charting position is Torrid Holdings, which at the moment is not living up to its name. It looks like as though it's in recovery mode. We had the gap down back in September, and we're now back above the floor of that gap around $193. The longer we can stay above that, the greater the chance of a move up to the top of that falling trend channel from back in March at $270, and we're looking for that by the end of next month. Other new name for the Chartbreakers is enVVeno, and enVVeno Medical Corporation is in a rising trend channel. Had a brief test of that support line there from the back in June, and that's the floor of a rising trend channel which has been in place as long as April. Top of the channel here up to $660, and we're looking for that by the end of this month, looking for an imminent break of recent resistance through 580 after that one-day bear trap. That tends to be something to flush out the weak hands, and then a stock or a market can head higher after that. Moving along to a stock which I have given coverage to before, Golden Heaven. Rising trend channel here from the end of July. Golden Cross, in fact, as well, which is rather appropriate given the name of the company, between the 50 and 200-day moving averages earlier this month, and above yesterday's support and the floor of the channel around $666. We're looking for $11 by the end of next month. So let's see if Golden Heaven can live up to its name for the bulls. Covered Houston American yesterday, and here you see the shares managed to stay above the 50-day moving average at $205. Above that, we're looking for the top of a broadening triangle from back in May as high as $265, ideally by the end of next month. Bullish divergences, bear trap gap reversal, so it's got everything we like in terms of a potential turnaround. Kratos is next, or Kratos, rising trend channel here from the turn of the year. Top of the channel there heading for as high as $18.60. We're looking for that, especially while we're above yesterday's support area, $15.60. But ideally, we stay on the right side of $16 ahead of a move up to $18.50 plus by the end of this month. If you're a fan of the shares looking for greater glory, then the extended target is the upper parallel of that rising trend channel from back in January up to $22, and hopefully that would be a target that shares could achieve by the end of next month, looking for $18.50 by the end of this month. The next stock is another one I looked at yesterday, Modivcare, and here you can see that we're in a broadening triangle base. We're just nudging, or about to nudge, the 50-day moving average at $34. If we can do that and beat that on an end-of-day close basis, we could be as high as $63 or $64 by the end of next month, given that we've already come down a long way from the turn of the year highs through $110. So maybe this situation finally worth an overdue turnaround. M-Tron is next, and here the picture is that we've hit the target, the top of that rising trend channel from June, around $24.75. Above that, we can extend the target up to $30 by the end of next month, while we're above the September resistance area around $21.50. So looking quite healthy there. On to the last two. First one is NWTN, and here broadening triangle reversal. Hopefully that's been in place from June, and above the 50-day moving average. If we can close above that, maybe on a weekly basis, $9.20. We're looking for $12 by the end of next month, hopefully a bit sooner than that, given the amount of consolidation that's already occurred. Finishing off with a real flyer, and here almost impossible to chart, but the guess at the moment is that we're in a rising April trend channel. The floor of the channel is basically the start of the week support for this market, $22.60, and above that we're looking for $40 by the end of next month. Obviously that's a punchy call, and we're hoping that we'll at least remain above that $22 area ahead of a potential fresh move to the upside. This is likely to be a mid-move consolidation, even though obviously we've really flown very high there. That's it from me today. More updates tomorrow.